coming to our corporate accounting class. Now we are going to solve a problem on acquisition of business. This problem is taken from Reddy and Murthy. This is a simple problem. For want of understanding purpose, I have selected this problem. This is problem number 8 in Reddy and Murthy textbook. See, you know very well basically what is acquisition. See, in this question, Manoj and Co. is a firm purchased by another one joint stock company. So that purchase is made for a consideration of 1 lakh rupees. And also we are given in the question that 1 lakh is discharged in the form of equity shares, 2,800 equity shares at rupees 20 each, and preference shares for rupees 34,000. Balance amount is 10,000 is paid in the form of the cash. So total 1 lakh is discharged in three modes. One is equity shares, another one is a preference shares. Balance amount is in the form of the cash. So now we have to prepare the opening entries and we should prepare the balance sheet. So mind it carefully. If you want to prepare the balance sheet, we have to pause only the opening entries. What is that opening entry? Opening entry in the sense we have to open the books of accounts. Books of accounts of the new company. So the first entry, you know very well. First entry is purchase consideration should be recorded. Business purchase account data to Manoj and Co. Second one is existing books. What are the assets and liabilities are available and taken over by the new company. Those things should be brought into the new books, in opening books. So based on that concept, sundry assets worth in existing balance sheet that comes to 84,000. Business purchase account that comes to 1 lakh rupees that we already calculated. That is the purchase consideration. And in existing balance sheet we have 4,000 rupees as creditors. If you pause this entry with these amounts, we will get the difference in debit side. That debit side is supposed to be taken as goodwill. So for want of a knowledge, just you think if the difference arises in the credit side, you will be named that as the capital reserve. So in this problem, we are getting the difference in the debit side. So it is goodwill. This goodwill will be in the new balance sheet, that is opening balance sheet. Then third one entry is payment entry. How the purchase consideration, that is 1 lakh rupees, is paid off. In this question we are given with clearly what are the mode of payment. Equity shares for 56,000, preference shares 34,000, and the balance amount of 10,000 is paid off. So now we are entering these three items in the form of a payment entry. Manoj account debtor to Manoj and Co. debtor to equity shares, preference shares, and bank. See, first I said cash. Now I am saying as a bank. Why? Because normally huge amount not paid in the form of the liquid cash. It should be routed through only the bank. So that's why I am named this item as bank. And in the question, please have a look on that question. We are given with the point. It is taken as the balance of 1,50,000 is issued. Shares are issued. So that also we have to enter in this question. So what the amount of equity shares issued? See, because authorized capital is given, then for purchase consideration we are having the point of how many equity shares issued, how many preference shares are issued. So balance is what? Those shares are issued. That we are passing entry. Bank account debtor to 1 lakh. Bank account debtor to equity shares. The one point of a difference is the total amount comes to 1,50,000, whereas in the question it is given as share application and allotment. These two things are given, but I have taken the entire item. Okay, so actually, strictly speaking, the true sense you should pause the entry based on the installment what we are having in the question. But this is also correct because nowadays no installment basis, it is paid total amount total fully collected, not on the basis of application allotment, first call, second call, like that. So bank account data to equity share capital 1,50,000 given in the question. Then we have to prepare the balance sheet. Before preparing the balance sheet, it is better to prepare the bank account. Why? Because payment entry, amount received, opening balance, all those things are available. So it is better to prepare the bank account. Opening balance is taken in the debit side because bank is a asset. All assets are debit balances. Closing balances are in the credit side. So this is a bank account. We have to debit the opening balance 7,000 rupees. And equity share capital amount received, that last entry, bank account data to equity share capital 1,50,000, that item is entered. Then another one is Manoj and Co. We paid the amount to Manoj and Co. in the form of the cash 10,000 rupees, that is also entered. That is Manoj and Co. debtor to bank. Obviously bank account creditor by Manoj and Co. 10,000 is entered. The difference amount is taken as closing balance. Right? Difference is taken as a closing balance. I entered that as the by balance carried down 1,47,000. So that 1,47,000 is entered in the balance sheet as the next period opening balance. Now I am preparing the balance sheet. In this, one simple key factor, if you prepared the second entry, sundry assets account data to business purchase, that entry properly, then automatically your balance will get tallied. First, what the creditors we have brought into the business, 4,000 rupees, refer that entry. Then equity share capital, first equity share capital 56,000, and then now we issued the equity shares worth 1,50,000, that is also entered. And preference shares based on the purchase consideration, we are having 34,000. Then cash paid against the purchase consideration 10,000, that will get adjusted. You refer that individual account for bank. Then assets given in the existing balance sheet, those assets are taken over here, and the cash balances given in the existing balance sheet, that one is also adjusted as opening balance, entered as opening balance in the individual bank account. You please refer that. And next one is, now we got the closing balance for bank account, that one is taken here as 1,47,000 in the new balance sheet. And we got the goodwill, that is a difference value, difference amount in the second entry, which is 20,000, that is also entered. Finally your balance sheet is supposed to be tallied. So this is the basic first step problem in acquisition of business. Three things you should keep in mind. One, purchase consideration should be calculated. Number two, what opening entries you will have to pass, that you should know. Then how to prepare the balance sheet, that is also most important, right? In some questions, closing entries may be asked for, whereas for closing entries you cannot prepare the balance sheet. Okay, so in this manner you will have to prepare the acquisition of business. This is essay type question.